It's Thursday, May 6, 2010. The markets come crashing down. Welcome to freetradingvideos.com. Check this out. The Dow at one point was down nearly 1,000 points. We are down 3.2% on the Dow. 3%, that is huge. 3.24% on the S&P. The NASDAQ down 3.4%. Russell's down 3.7%. The VIX spiking 32% up. Gang, at one point, the VIX was up 60%, and we were up over 40 on the VIX. There is fear. That is blood running in the streets. And check this out. Everybody wants to know why. Why did the market break down? There's some significant worries out there about the European financial markets, seizing up. But a lot of people don't know this. But check this out. Nothing like fanning the flame of a fire on gas. But an interesting thing happened on Procter and Gamble today. There was a misprint. One of the New York computers reporting market data had a misprint showing Procter and Gamble at 62.12 and then dropping immediately to 39.37, a huge tank. Now it fixed itself coming back up, but man, things in motion. I'll tell you, all it takes is a little push down the hill to get things to slide. But the other thing that happened, and as a technician, I don't care what happens in the market. I don't care why something went up or down. I play what I see. This was a very, very good day for me in the markets. And what was interesting is I had somebody here with me, and that was a novice in trading, didn't know trading, and he couldn't believe how happy I was with the markets being down 1,000 points. It's because we can make money on the when the markets go up and when the markets go down, and we can make a lot of money when you get a big move in the markets. And gang, we got a huge move in the markets today. Now check this out. We're going to go back, and I'm going to show you two trend lines I want you to pay very special attention to. We have the blue one that gives us our lows in March 2009. We come up. Now I also want you to pay attention to our purple trend line coming up here. Now this is July area of 2009. I'm going to bring these two trend lines up on the S&P daily chart, and we come up and they both intersect with each other right here in February 2010. Now, so these both of these lines, especially the blue one, are acting as significant support areas. We come up, we come up, we come up, and we come down. Now check this out. Things really got hairy and fast when we broke that big blue one. Now gang, check this out. Right here, we have a close below the 50-day moving average. I told you yesterday that bad things happen under the 50-day moving average, and that's something that we teach our students here. Our mentor, our trading graduates, our students here, we tell them, we teach them that you got to be very careful under the 50-day moving average, because it's like trying to catch falling knives with your teeth. So what happened here is we broke down below the trend line, that support line, boom, and we broke down below this area of support. And check this out, that area puts us at 1150. That's a big, big area. I thought we'd actually get a bounce there. So we broke that trend line, we hung up there, and then boom, we come crashing down below the 100-day moving average. Down lower, 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 brushing all these support areas. And then big red, the 200-day simple moving average just come crashing through that all the way down, finding a low at 1065. Did you hear me? 1065 on the S&P. That is huge drop. But things that drop fast bounce fast. We come flying back up through these resistance areas and come up, closing here at 1128. The problem with the close of at 1128 is simply this: we did not close above that purple line that we just talked about. We're below the 100-day moving average. We're below that trend line. We closed below it. That is weakness. But I've got some significant lines here that I want to talk to you about, because these are going to be hugely critical to you as a trader in this market right now. Now watch this. As we come across that 1150 is going to be a resistance area, because we did have some significant volume buy back in for this rally back north. So if we do get a pump here, it's got a lot to fight through. It's got a trend line to fight through. It has the 100-day moving average to fight through, and then it has this big 1150 to fight through, and then this ginormous trend line to fight through. Remember, this one goes back all the way to March of 2009. If we drop, and look at this, there's nothing here. I mean, it could drop quite a bit. And I'm going to show you a couple numbers here. I'm going to bring this in so you can see these. Here are the numbers you need to be aware of. 1110 will be support. 1103 will be support. 1092 will be support, 1075 will be support, and then 1056 will be support. There are your numbers. You might want to rewind a little bit, pause it, write those numbers down, because gang, that's where we're at. The markets are on a slippery slope. We can come crashing down. When Asia wakes up tonight, they're in for a rude awakening. So it'll be interesting to see how overseas handles and digests this market and what happens tomorrow. Now, anything can happen. I have no idea what's going to happen. So I picked up longs at the end of the day. I have my shorts going, so I'm hedged. I will unload those that I deem to be the weak ones when the market opens tomorrow. But let me say this. If I'm going long, it's only short term. What we were seeing up here, and I was giving you guys so much warning here, I was saying that the markets are rolling over. We have a wedge that on the sell days here, significant volume. And gang, we had ginormous volume today. And I was showing you these negative ticks. We were below zero on the I was giving you all the warnings I could possibly give you. And right now we're seeing that the markets, I think, are in real trouble. Even if we were to rally back up, I could see a double top type formation or worse, rally up and then drop a lower swing high. If that were to happen, the markets are in just deep trouble. Here's the weekly chart on the S&P. Rising wedge, we broke down below it, major support lines. I mean major support lines. And at this very moment, I mean, check this out. We come down. I had this little trend line, support. You see this? Good. Look where it hits. I mean, perfectly right there. We found support at the rising 50-week moving average. But that, my friend, we're in trouble. For that trend line to get broken, we have sustained some significant damage. And on the MACD histogram, we have a negative tick. That means on the 12, 26, and 9, we have a crossover already taking place. So please share this video with all your other trading colleagues. It is so imperative that you get hooked in with FTV here. We do 3 free videos where you get a free video pre-market to know what's going on pre-market, what happened overseas. You get an intraday video in the middle of the day to know what's happening, and then you get a video post-market to wrap up, and that's what you're listening to here. We even do a weekend video. This is called free trading videos because this is where we as technicians, as traders, help you as individuals needing to find out and know what's happening out there in the markets. We look forward to teaming up with you. Take care and safe trading.